Scheduled. Live. Prasanna, we are live.
Hey, Rajan.
Hey, Prasanna. So we're doing this back again due to popular demand. For some reason, our conversation has had the highest views, and a lot of people have asked us to do this again. So we're talking now because the year has ended about how did the year go by, and what can we learn from 2023 in generally the SaaS industry from an India SaaS perspective, and lessons for founders to carry from 2023 to 2024.
Yeah, absolutely. I think it's been a very, very tough year. And I think a lot of the advice that was given a couple of years ago in terms of raise a lot of capital at high valuations, I think this year a lot of founders found out why raising capital too far ahead of valuations is not a good thing. And I think at least what I'm hearing both from a lot of people is that I think startups had cut a lot of burn in 2022, extended their runways to 2023, early 2024. Many of those startups are not able to raise any more capital because they raised a too high valuation. And now, over the next 3 months, 6 months is when we'll see quite a lot of startups that raised a lot of capital but were unable to find product market fit actually getting shut down. I remember seeing a tweet last week by somebody who's in a fund of funds, and they said that 25 startups have shut down in the last quarter or so, right? And that's just starting. Uh, and it's interesting today. I think everybody's talking about cash flows and the importance of unit economics and stuff like that. I just wish that the folks who had given a lot of capital to some of the startups had also told them, spend this money to get to unit economics and to cash flow positive.
Yeah, so capital efficiency took the center stage, and we also mentioned that in the year end report that we summarized, right? Saying for many years, capital efficiency was something that was thought of as like a pariah topic, but now 2023 full blown, it took center stage. And what you mentioned, snapping out of that hyper valuation delusion, saying oh, we've grown the valuation of the company far ahead of the revenues, that all came crashing down. So some of the benchmarks that I'm seeing is that the multiple definitely in the public market, and public market multiples always inform valuation in early stage. So there, uh, even for 2024, looks like it'll stay between the 6 to 9x multiple, right? I mean, only the top 1%, really the top quartile, top 1%, they are going to have, which is maybe some lower double digit multiple. But gone are the days of crazy 50x, 30x, 100x in terms of
Absolutely.
valuation. So yeah, in 2024 also it'll be the same. And how it hurts founders, it has become and so much so that we've been talking about capital efficiency. Now it's not a differentiation anymore. So we
Yeah,
talk less about it, but that is what the reality is today, that there is no choice, but everybody has to be capital efficient.
absolutely. I think
What
when
are
we
some of
did the
these?
report as well, right? I don't think capital efficiency was so much,
The
uh,
ENY report.
yeah, earlier this year. I don't think capital efficiency was so spoken about or so much in demand, if you will. And what I'm hearing is that 2024 people are going to push even harder for capital efficiency and unit economics, and not growth at all costs, but growth with solid product market fit and growth with clear unit economics.
Yeah. What else has happened in 2023 that is shaken the entire industry?
I think there's one IPO in particular, which is Clavio. It's a very, very interesting outcome this year. It was the first IPO in a very, very long time, but also very interesting because they were completely on a very what was considered a very small vertical, e-commerce sellers, and they're completely in on that. Their largest base of customers are actually Shopify customers. So it's also considered that Shopify customers don't are small merchants, and therefore it's hard to build a large business from that. And also Klaviyo, while they raised a lot of capital, they actually spent very little of it. So by the time they came to IPO, they had only spent, like, if I'm not wrong, a couple of tens of millions of dollars of capital to get to 100 plus million of revenue ARR. And so that was a very interesting IPO to come in at this point in time. Uh, Very capital efficient company built with SMB customers on a Shopify platform, and also managing to IPO in a very difficult year with extremely good unit economics, right? So the right IPO for this market. Uh, but it's interesting to think how they would have performed in an earlier market, or it's interesting to think whether and how their valuations will hold up this year and the next compared to companies that IPO'd on much higher growth numbers or much lower unit economics a couple of years back.
Correct. One other thing I would say that spooked everybody this year was AI, right? That became a talk of the town, and I think people are still spooked by it. This is AI is just like one of those platform shifts, just like how mobile happened in
Right.
2009, and then it changed a lot of how businesses are done, and people started talking about, hey, we need to actually start thinking about natively from for this platform. AI finally again AI is when I say finally, AI had actually had these moments before, but now eventually AI is being considered as something that is not one of those hype cycle, and then AI will go up and then it'll go down. Many people, more, I mean, almost everybody that you speak to, they are like, look, the AI trend is real. And what does it mean for SaaS, and how will SaaS get disrupted? What should SaaS founders do at 100 mil ARR stage, or a 10 mil ARR stage, or a 1 mil ARR stage? That has been like on the minds of people. Practically everybody is like, look, what do I do with this AI thing? And so still
Absolutely.
people are figuring out. Incumbents are also someone who have like invested heavily in this, and compared to the enterprise software to the cloud shift or the SaaS shift, where there was like a big mindset that was to be changed, the business model had to be different. So that shift took time, but to go from SaaS to AI, practically it is just switching off a new API, right? So
Right.
incumbents are moving in faster, so that puts additional pressure on startups, whether they are like super early stage, or even if they have reached a certain like sizable size of the organization. And that is completely spooked everybody, right? I mean, I heard some people like even proclaiming recently in a small group, saying that, look, SaaS is dead. If you not climb the AI bandwagon, then you are kaput. Anything you are hearing on that?
Yeah, I think I'm reminded of one company that I've been working with, Waymo, and they've been building essentially an AI co-pilot for salespeople, field salespeople, since 2014, 15 maybe, right? When it was really not sexy, right? And very hard problem to solve. Mm. And uh, LLMs or no LLMs, that is a very hard problem to solve. And I think most people who are plugging copilots and stuff like that are really underestimating how hard it is to build a copilot for a particular use case, especially something that uses your own data, uses it well, does not hallucinate, all of those kind of things is non-trivial, right? But Waymo's been doing this for a while, and I'm hoping that the LLM shift and the focus on copilots and things like that will help them grow even faster than before. But why I'm bringing up Waymo is that this stuff is not new. People have been trying to do this stuff. Waymo is obviously a SaaS company. They've been around for a while. They've grown revenue significantly. They're global. They have customers in Japan, India, Southeast Asia, US, wherever, right? But Waymo is actually a very co-pilot approach compared to a Salesforce, which is in the same domain, and Waymo competes with Salesforce, right? Uh, has OpenAI or LLMs made it easier for somebody to build a Waymo? I don't think so. because the user experience, the data integrations, the way you want to enable people, the way you need to track that, the way you need to report on that, all of that stuff is non-trivial, right? The LLM is not going to do that for you. So I think that um, what we are seeing is, for example, I forget the name of the company that was helping with writing, right? They saw huge growth, and then they
Jasper,
started
you're talking
seeing
about Jasper
Jasper.
or
They started
writing.
seeing churn as well, right? So I think for sure, uh, OpenAI and GPT are performing things that would be considered miracles 2 years ago, 3 years ago, 4 years ago. For uh, any of us should be using them as a analyst, right? So if all of us cannot afford analysts, we should be using ChatGPT as an analyst for sure, because it can do a lot of stuff that an intern or an analyst can do for you. How much of it can be productized, how well, how stickily, all of that stuff, that needs a lot of work between what the LLM can do and how it can actually help somebody in a business do their job better. There's a vast gulf there which is being underestimated. It's similar to when an Excel came out and Access DB programming came out. People posited that everybody would write programs to do everything, and there would be no few need for fewer programmers, and that didn't happen. And that a lot of software would just be Access and uh, Excel, and that didn't happen for obviously for many reasons. And I think those reasons hold good, just as good for this LLM transition as well.
So for a lot of folks, they call this as, hey, we can use this OpenAI and then build a thin wrapper. But what they're underestimating is how thick this thin wrapper is, right? You need to do a lot
Correct.
than just like making sure that you're plugging AI as a battery. I'm hearing a lot of conversations around, hey, what if incumbent builds this, or like, hey, what is my durable advantage for this? Questions like, what is the moat? I personally feel in early stage there is no question of moats, right? The moats is something that you build over a period of time. Coke has a moat of being a brand, and in SaaS is not a network effects business, and SaaS, like the biggest moat that you can think of building is either like switching over cost because you have like great number of integrations with existing working platforms, a tool stack where your tool has to work into, or like you've built a terrific amount of brand where people have great recall for your product in a specific category. But that builds over a period of time. So the question of moat is really early. But even in terms of like thinking before the moat question itself, in terms of how you figure out what is the idea you need to work on, there are some patterns that are emerging, like co-pilots, or can you build a new layer in the Gen AI stack that is coming in? Can you build the new Datadog, etc.? But all of this is going to go through a very similar thing that like any SaaS application goes through, right? So anybody who's building a SaaS application, the first question that they should be asking is, hey, who is my buyer and what is his buy process? And like in that, where is the friction that is coming in, and how do I build a tool to map that buy process, right? And understanding that is the core competency that you build in SaaS. And now, because there is Gen AI, you are asking this question saying, now that this magic wand is there, how can I imagine a solution which is 10x better or 100x better than what I would do without a Gen AI, like as available as an option? That's the reimagination that you have to do, and maybe there is new imagination that you have to do on the UI layer, but it is going to go through the same idea maze that how you would do even without Gen AI. So that doesn't change. So anybody who's in the early stage, they should actually not be worried. They should only like unconstrain themselves in terms of thinking, hey, how can I use the Gen AI as a magic wand and reimagine solution that I would have not thought of before, right? Maybe it's not a workflow interface, maybe it is a chat interface, or maybe it is not even a chat interface, it's a new interface that is a hybrid of the two. Most people are worried, and they are focused more on, let's say, the platform layer. Anybody that is talking about Gen AI, they are saying, hey, we are using this open source, we are building in an LLM. I think one of the things that people have to keep in mind, we tell this to founders within Upekkha, is that no GPU before product market fit, right? I mean, you're not going to think about bringing in like heavy infrastructure, and a lot of the conversation is going there. I agree that I mean, in Valley, if you are doing a lot of marketing speak, then people think that you're not real, and therefore, like, show me the code becomes the first question to actually establish credibility. But you should not lose the sight of saying how you build with Gen AI is no different than how you build without Gen AI, in traversing this idea maze of what's the high value problem and what are the alternatives that are there in the market. Maybe one other question that most folks have to think about is to say, hey, when I am picking an idea, this particular idea, is this something that an incumbent will come and just spend 100 million because he already sees there is a big TAM? Like trying to do like a chatbot on top of like a Salesforce type of an application. Even Mark Benioff is going around and tweeting saying, hey, here is our LLM, because this tech change is so big that everybody is spooked. But where the advantage of a startup would come is where they pick the idea right, where the big guy thinks that this is not very big enough, but they start at a starting point and understand like a particular bio persona, and imagine the solution using Gen AI, and imagine the UX in a way that was not done before, and expect that that particular idea or zone, there is not going to be a lot of incumbent for like attention. And if you build traction by then you can go and like get in the eyes of the incumbent. That would be the way to think about it. Not very different from how you think about building uh, before Gen AI, right? And most people don't um, understand this aspect of you need to go through that idea maze, and that's where this is causing a lot of spooking, right? I mean, um, if you are,
I
I
think,
mean, even without Gen AI, you should be spooked enough in that early stage. So the Gen AI doesn't add anything new for an early stage founder to get spooked about.
yeah. So to me, it feels a little bit like the uh, pre pre iPhone smartphone era, right? Because the iPhone was not the first smartphone. Java phones and Nokia phones, and I remember seeing a friend of mine browse the internet uh, on a Japanese phone in way back in 2002 or three, well before the iPhone. But getting applications or running applications on that phone was non-trivial, absolutely non-trivial, right? Nobody knew, like, it was like magical to be able to run a whatever J2SE or J7SE or
J2ME.
whatever J2ME or
J2ME.
whatever nonsense,
J2SE was for the desktop. J2ME is
yeah,
for the mobile edition.
whatever nonsense it
J2E
was.
is
It
for
was
the
so hard to even imagine an application and put an application on a phone and be able to run it. Right? It was non-trivial. And I think today, and you know, those phones would evolve so rapidly. The J2ME stack was evolving so rapidly. What you could do from the phone, the connections, the 2G, 3G, all of that stuff was evolving so rapidly that it was somebody could become a very early adopter and become really good at something, but it was very hard for them to keep up with the rate of change, right?
at the
And today,
engineering
that's
side, tech side.
how it feels to me, right? Before the iPhone came, before there was a stable platform for developers where everything was there in one place to develop and build and do. Today it feels like the era of Nokia phones and J2ME and proprietary app stores, where people are trying to build some stuff. It's not clear which will work, how will it work, how will you know whether it's working, and so on and so forth, right? And that's where I think what has happened is, especially what Kashi is talking about, which is the multimodal AI, plus the way that AI is ChatGPT is working. It is both too magical and at the same time, not usable for many different things, right? The too magical thing forces us to think that, hey, we have to use this. There has to be some way I can take advantage of this. There has to be something that I can do with this. I should reimagine how things are going, and so on and so forth. That's the part that enables us to think a lot and figure stuff out. And at the same time, the base is shifting so fast on a day by day basis, week by week basis, that it's hard to build a castle on top of this shifting sand. And I think that's where this morning we had Yellow Messengers Raghu speak about it, and they've been using NLP for 6 7 years since 2014, 15, 16 onwards. And what they're saying is, look, actually, enterprise customers couldn't care less what LLM you use or what technology you're using on the background or whatever, right? They only care about, hey, is my use case getting solved? How are you doing it? And most of your buyers, if they're business buyers, they don't understand the tech. They don't know what L means or L means or M means. They're like, do my job for me. How much do I pay you? How do I know you're doing the job? That's it, right? So I think somewhere there are a lot of founders who are chasing these things because it's cool. They've not figured out a use case. They're just building stuff. In hindsight, we will see maybe in a few years that some of these things were just trivial things which really didn't matter, right? And again, in hindsight, some people will discover that, oh, wow, these applications actually, even though they look trivial, they were like toy kind of things. They enabled a lot of people to do a lot more, right? So I think that is where I don't think upfront many of us will even be able to recognize which ones are which. And we need to help more founders, we need to help more people deliver more value with this. And maybe it's not going to be on the same buyers, maybe it's not going to sell the same way. I think the jury's still open on that.
So let's shift gears, Prasanna. Let's talk a little bit about 2024. Like, what are lessons from 2023 that can be carried along? What are things that are likely to shape up in 2024? And yeah, let's start with that on 2024.
So good news good news is that US is not in a recession, right? So I'm assuming that most SaaS companies are selling globally, uh, primarily US as a market. Good news is US is not in a recession. Couple of folks are now saying that the US has achieved a soft landing, which is they managed to curtail inflation while not increasing unemployment and therefore going into a recession. So if the US is not going into a recession and it continues to grow reasonably while maintaining a high employment with low inflation, then businesses are going to get back into an investment mode. Now, will that happen now? Will that happen in 6 months? Will that happen in 12 months? That's anybody's guess, right? But these cycles are, uh, are we're not. The good news is actually that it could be much worse, right? Uh, but on the other hand, a lot of folks are saying that the budgets for 2024, etc., have been made very conservatively. So if you're selling to mid market or selling to enterprise, most of those folks are assuming very conservative budgets. They're still trying to push for profitability over making investments. And therefore, from a tech perspective, tech buying is going to continue to be muted through the first 2 3 quarters of the year. In the US, 2024 is also an election year. In an election year, a lot of money gets spent. And there is a lot of pressure on the incumbent government to show a better performance in many different ways. So if that happens and that triggers more spends, if that triggers something positive in the cycle, that could happen as well. Uh, what we have to be thankful for in this season of giving thanks is definitely that among all major economies, at least the US has record low unemployment, which means a lot of people are earning money, a lot of people are spending money. The US has managed to reduce inflation, which means that more people will spend money now rather than you know keep it for the future. Um and we need to see that US interest rates seem to have plateaued. Uh, and many people are saying that the next cycle of uptrend will start if the US government starts easing up on the interest rates. But we don't know whether this is going to happen in 3 months, 6 months, or 12 months. So the advice I would have for founders is assume that 2024 is going to be as hard as 2023 from a revenue standpoint. And with that as starting point, what would you do differently in 2024, assuming that towards the third or fourth quarters of 2024 things are going to become right? So I think that's how I would think about 2024. I've heard that very mixed things about the India market. As always, it's very confusing. Hmm. I don't know many startups in India selling SaaS in India which are about 20 or $30 million in revenue. Leave aside Tally and a few other outliers. India market continues to be very price competitive, very hard to, very easy to win a few accounts, very hard to grow your ACVs, very hard to. Actually, that's wrong. There are now ways to get 100k ACV, 500k ACV from a handful of customers in India. That was not the case 4 or 5 years ago. After COVID, that has changed. But there is still a lack of depth in the market. So, can you get to 30 million in the Indian market? Can you get to 50 million in the Indian market? That is remains pretty difficult.
So Bhargav is happy that you've given a positive outlook. So on the note of positive outlook, I would say that it's a temporary problem in SaaS. It's a but one way also to think about it is it is within SaaS where the least amount of capital destruction has happened, least amount of carnage has happened. Many other 25 companies that you talked about, I'm pretty sure has a lion's share in B2C and things that were
Absolutely.
running really high on valuation. So B2C, B2B and SaaS has had the least amount of
Absolutely.
carnage, right? So the other thing that I would
I
say is
think
that
at a overall high level, right? There's like going to be $1 trillion of software spent. There's going to be $1.6 trillion of software services spent. None of this is going away. The CAGR on this stuff is really, really good, right? Mm, People want to use more software, not less. Um, People are going to use new types of software like copilots and so on and so forth. That doesn't mean the old type of software is going to go away, right? So founders need to figure out, hey, what is a problem that's burning enough that somebody will put a budget to solve it today. That is very different from 2021 or 2022, early 2022, whatever, right? Those problems are different. And so that product market fit has to be redone. But it's there, the market is there. I was just speaking to somebody who said they grew from 500k to 7 8 million in the US in the last 18 24 months, right? So there are markets that are growing. And now, how do you get there? How do you solve problems? How do you get sticky with the customer? How do you get a great NRR? None of those problems, none of those solutions have changed in the last whatever time frame, right? Uh, there are more companies in the market. More of them are desperate, and therefore, your competition is they're desperate. Then they're going to be dropping prices. They're going to be doing all kinds of stuff to try to sell, and of course, buyers have to buy, right? And so if the buyers are conservative, they don't buy stuff that is unless it's super critical. So become super critical.
right, like how Klaviyo showed, right? So if you're like a fantastic company, very capital efficient, and you're growing really, really well, then despite one of the worst market condition, you still have options open, and market will take you favorably, right? So that I think will continue in 2024 as well. Maybe there will be more IPOs than 2023 for more companies like Klaviyo come up. And I'd also say that the Series A has dipped a little bit at the Series A stage, where VCs are looking for more traction metrics. They are not in a hurry to actually close a deal, so therefore there will be more scrutiny around that. But from an early stage perspective, where if you're starting out, right, and thanks to Gen AI, practically everybody who's less than $1 million ARR have to think of themselves as starting out. And if you've not raised crazy valuation, that pressure is not on you,
Correct.
then it is like a great point, right? I mean, these type of dips is the point in time where if you start, you build like generational companies like Klaviyo, Mailchimp. They all started when the markets were considered to be in bearish mode, right? So that's the positive spin of the condition that we should take both on 2023. If you're focusing on basics, if you're focusing on large markets, if you're not trying to sort of experiment around category creation, you go find those places where the demand is there, like the example you talked about, Prasanna, and you're able to differentiate there really, really well. You're able to package and position, use the India advantage, then all the things are in favor, right? I mean, those that had too much money, that was cause of concern like a year or 2 years ago, they're all falling flat, right? So those who are prudent, right, the time hasn't been better for those people that are prudent. And like in 2024, as you said, as things ease up, the animal freeze that customers went through of saying, hey, it looks like everything is contracting, we should also wait, I think that will thaw a little bit. So therefore things will also take off more from customer growth perspective as well. So the sentiment will turn from, oh no, things are not doing well, the sentiment will definitely be positive. It'll take some time for the sentiment to translate into, like, the numbers, but definitely it'll happen in 2024.
Yep.
So Prasanna, any final thoughts before we wrap up? We are up on time.
I think the key, as always, is to talk to customers, find ways to talk to customers, find ways to identify their high value problems, and work on those, whatever tech it is.
Right. So my final thought would be that Gen AI is real. Like, when you're thinking about it from a solution perspective, ask yourself this question. You need to come up with a good idea. Idea matters more now than before, and pick a idea where, like, you are able to deal with competition and incumbent really well. But at the same time, think about saying, how do I use Gen AI and imagine a solution in a way that was not possible without Gen AI, right? That's where like a lot of traction you will get. If you're going to do the same thing that you were doing before, competing with the old application SaaS and things like that, you may not find a lot of tailwind backing you. But when you use Gen AI and think about how do
Yep.
I reimagine the solution, that's what will lead to a lot of new tools that are going to come out in 2024.
Absolutely.
Awesome. So Prasanna, let's wrap up. So good again chatting.
All
Folks,
right.
till we meet you in another LinkedIn Live, bye for now.
Bye.